Good morning, good afternoon, good evening, everyone, and welcome back to the breakfast show. We don't really have that much to talk about today. It's a quiet day. Tomorrow, the markets will be closed, and then on Friday, we only have half a day to talk about the stock market. Now, as you can see, I am wearing a very special shirt today because for those that thought that Barcelona were going to win, no, they lost. They lost like a bunch of amateurs. Exactly. So it is a very good morning. It is a very good morning. So today, my experiment wearing red shirts to get green days is going to be on hold because I rather wear this blue one for the day. Now, yesterday, despite Champions League football, we had Dell that reported their quarterly figures and Zscaler as well. So we're going to have a look at those numbers right now. Pre-market, it seems like we are greenish. It seems like we are greenish. This is how we closed out yesterday. Yesterday was a good day, all in all. Companies that did take a hit were Nvidia and AMD, although they did recover towards the end. I did a specific video about this whole TPU GPU type of story and why the market is freaking out just for the sake of freaking out, which didn't make much sense. And right now, this is basically it. We have an okay pre-market, mostly green right now. We'll go over a couple of names in a bit, but it seems like we might we might get a rebound or maybe an end of year rally. Although December is going to be a pretty important month, despite December usually being a quiet month, right? Towards the end of December, end of the year, holiday season, low volume and all of that. But we do have a Fed meeting where now the probabilities are quite high that we are going to get another 25 basis point cut. We are finally going to get, again, hopefully consistent macro data, inflation data. We might get a new Fed chair, announced, that's going to replace Powell, I think, in May of 2026. So December seems to be a pretty important month leading into 2026. For 2026, there are, of course, two scenarios. One scenario is the best case scenario is rates come down, inflation stays under control, economic growth is better than expected. Bad case scenario is rates come down, but economic growth is not great and unemployment keeps going up. Those are the two scenarios for me right now. So what did we have for today? Well, what do we have for today? We have a couple of, let's say, earnings overviews. Earnings overviews. Yesterday, Dell, a pretty, I would say, important player, not the biggest player out there, but a pretty important player in this whole AI revolution. Right now, their stock is up 4.2%. It's a $85 billion company or so. Year to date, the stock is up now just 8.1%. Over the past 3 years, stock is up 182%. It's not the most expensive name out there. By the way, this is on fiscal.ai. You have 5 days, I think, or 6 days where you can enjoy now 30% off. They usually don't do sales that big, I think once or twice throughout the year. If you want to try it out, new users can get this Fiscal Pro for free for 2 weeks. If you like it, you can use the link. You'll get 30% off all plans that you choose. Link is in the description. Now, Dell reported, so we can go here on the transcript. We will get everything, the report, the slides. If you want just an AI summary, that's fine as well. This is basically it. Revenue increased 11% year over year, EPS 17%, AI servers $12.3 billion, bringing year-to-date orders at $30 billion, shipments 5.6 in the third quarter, $18.4 billion of AI server backlog, cash from operations $1.2 billion, operating income $2.5 billion, up 11% year over year. They are buying back shares, and guidance was raised. So for the fourth quarter, they're now expecting revenue between $31 to $32 billion, a 32% increase at the midpoint. And then as for the full year, beat guidance quite comfortably here. They expect revenue to come in between $111.7 billion, that's up 17%, and non-GAAP EPS of $9.92, up 22% year over year. For fiscal 27, while early in planning, the company expresses strong conviction in its AI business and views its long-term framework, including mid-teens EPS growth, as a solid starting point for the rest of the business. I know a lot of people talk about SMCI. SMCI is cheap and all of that. Look, these aren't high margin businesses, right? Free cash flow margin 4.8, net 4.8, operating margin 7.3, EBITDA 10, and gross margins 21.3%. Yes, it's a growing top and bottom line. It's a very important player, but it's not a high margin business. It's not a high margin business. If we go and look at SMCI, for example, SMCI grows 10.1%, 1% free cash flow margin, 3.8 net, 4.4 operating, and 4.7 EBITDA. It's not great. It's not great. It's not good. It's not interesting either. Yes, it is cheap, right? It's a company, well, cheap. There's a reason why it's cheap. It's a company worth, let's call it now $20 billion, generating $21 billion in revenue for the last 12 months, expected to generate more than that, of course, the upcoming fiscal years. But if you like SMCI, you should like Dell. Dell is, as I've shown you, has better margins, all in all. I do have a poll running in case you want to vote. Stocks open red, close out red, green, or flat for the day. Then as for Zscaler also reported yesterday, and right now you can see that the stock is down 6.4%. 6.4%. Was it a bad, what is the bad call? Was the bad report? No, was actually good. But this is a company that, despite existing for quite a while, yes, it's still growing rapidly. I mean, ARR grew 26% year over year. Revenue also 26%. RPO increased 35%. Operating margin stood at 21.8%, an increase of 40 basis points year over year. Free cash flow margin 52%. But, and again, great company in the cybersecurity space, company worth $45 billion or so. But as you can see, and I'll show you this right here in financials, let's go to quarterly. You will notice why the market is like, okay, great numbers for the quarter, but why? Where is it? Operating profit still negative. Net income still negative. Earnings per share still a loss here of 7 cents. So that's basically the issue here, right? The issue is not revenue growth. Revenue has been growing nicely over the last couple of years. You can see for the last 5 years, compound annual growth rate of 42%. But when you look at EPS, for example, EPS is still a loss, right? Yes, it has been improving. It's improving, but EPS right now is still a loss. So the market is like, you know what, great numbers and all, but when are you going to be consistently profitable? We've had one quarter, probably a one-time thing right here. But maybe it's time for you to show us how profitable this business can be. Although we've seen free cash flow margin and all of that is profitable right now. Guess the market still waits for the real profitability of the business, because all in all, still expected to grow nicely, top and bottom lines. Yes, PE, again, it's normal. Forward PE 75.7 times. If they're still losing right now, it's going to be high. Once they get into positive territory and they continue to grow, it should come down drastically, unless of course the stock does continue to go up and up and up. But all in all, was a good quarter. They did also acquire a company, but it was all in all a good quarter. It's just maybe a lot of it was baked in, and well, yes, profitability might be in question. All right, moving on. We have US initial jobless claims actual 216,000, forecast 225,000, and the previous one was 220,000. So I guess not bad. Novo Nordisk keeps rebounding. Okay, Novo Nordisk keeps rebounding. So it seems like, yes, 40, 41 or so was the bottom for now. Now we do see it up another 3.4% pre-market. They said they filed for FDA expedited review of a higher 7.2 milligram semaglutide dose for chronic weight management, up from the 2.4 milligrams. A decision in Europe is expected in early 2026. Okay, again, with these types of things, there are going to be results coming out. If it's better than expected, the stock will go up. If it's not as good, stock will go down, just like it went down after the Alzheimer's results. JP Morgan, and thank you, Julius, for becoming a member of the channel. I really appreciate it. I'll go over a couple of questions in a bit, just going over a couple of things that I wanted to cover. So JP Morgan eyes S&P 500 7,500 by 2026. A bit strange by 2026 because that's in a month, with a bull case of 8,000. JP Morgan's 2026 global equity outlook puts the S&P at 7,000. Okay, so it's not by 2026, it's by 2027, I would say. So what do we see here? They think 7,500 by year end 2026, assuming 2 more Fed cuts and 13 to 15% annual EPS growth driven by AI capex supercycle and resilience US growth. If inflation improves and the Fed eases further, they see room for the index to push past 8,000, while warning that AI disruption is hitting an already K-shaped economy and could keep sentiment jumpy. Okay. All right. I mean, I wouldn't mind this. This would mean that 2026 would be another good year. I'm not muted. And if I am, that would have been funny, but I'm not muted. Maybe you have me muted. Oscar got a little price target upgrade yesterday, but we do have this Black Friday, Cyber Monday, some data here from Adobe. So Adobe is projecting US online holiday sales at $253.4 billion this year, up 5.3% year over year. Cyber Week is pegged at $43.7 billion, up 6.3% year over year, about 17.2% of spend, with mobile driving 56% of dollars. Buy Now Pay Later is expected to hit $20.2 billion, roughly $2 billion more than 2024, as AI tools and social ads push more traffic. It's going to be a very important quarter for the likes of Affirm, Klarna, and of course Sezzle and PayPal. I think Q4 is going to be a big and important quarter and the holiday season, I think, for PayPal as a whole. So we'll see what happens, of course, with Adobe, and I think with Amazon will probably give us a couple of numbers as well, but Adobe will probably give us a number a week after or something like that. Shopify will give us numbers, so we'll see how strong the consumer really is, or how weak, of course. Then, Oscar, yesterday we've got a Piper Sandler upgrade to overweight. We just talked about Novo Nordisk. Yeah, funny. Thank you. I know. Raises price target to $25. Analysts see path to margin recovery and sustainable growth, with calendar year 27 adjusted EBITDA floor at $404 million. So Oscar can grow share and profitability even if I don't know what this is. I guess that's the enhanced subsidies, but I've never seen this been written like that. Calendar year adjusted EBITDA floor, $404 million. That's based on a 15x multiple. That's how they reached their $25 price target, which was previously $13. Analysts see margin recapture as core to long-term progress. Benefit design, pricing, and broker strategy are key to calendar year 26 outlook. Yeah, quite funny that we're getting a little bit of momentum now with Oscar. A little bit. As for the rest, nothing much. For the earnings. We did have Dan Ives talk a little bit yesterday. If we wanna listen to him.
Now let's get into the tech trade with our next guest right here on set. Dan Ives from Wedbush, here to tell us how to play the AI revolution, why he says we're not in a bubble. Dan, on AI, this market has been ridiculously flighty. I'm old enough to remember when OpenAI was going to kill Google search, and when the narrative was Apple's dead money because it missed AI with Apple Intelligence, and that Oracle is the fourth hyperscaler. That was a recent one. You got to do your homework, not get caught up in each week's hype. So, with that in mind, what are your picks?
I mean, look, that's why, we spend our time in Asia and around the world, right? Because what the demand looks like. And we talk about our top 10 picks here. I think on the hyperscalers, to me, Microsoft continues to be the one that's just table pounder here. Relative to what I view as sort of the enterprise that's right in their backyard, everything we see in Azure. Look, 20% of the deals that we're seeing from Microsoft to Amazon to Google have been accelerated over the last few weeks, despite what we're seeing here. Palantir, to me, on the use case side, continues to be front and center. I think that's when I get the valuation worries, but that is really, I think, right at the epicenter of what we're seeing. And it continues. This is just the start.
Dan, hang tight. Dell earnings are out. The stock is initially popping a bit here in overtime. Christina Parks-Nevelis has the numbers. Christina.
John, Dell delivered a mixed report. The earnings $20 billion. Will be working.
The read-throughs for Nvidia, and it speaks to
about
what
Dell,
we're talking
so
about. The second, third, fourth derivatives are just starting to play out across the AI revolution. I think those that call it a bubble, it's easy to call it a bubble because you don't see in the spreadsheet. I believe this is a tech bull market. It goes on another 2 years. Look at Alphabet as another example. New York City cab driver was bearish in Alphabet to start the year. Now look, because the reality is AI is a tailwind for them. We're seeing that, even with Broadcom and everything we're seeing on the chip side.
I mean, yesterday, the president signed an executive order for Genesis Mission. This is the big AI project that is going to harken back to, the post-World War II years of Manhattan Project here. Is there a government backstop here? Is that one more reason why you should be buying into this bull market for AI?
Yeah, and look, as we spend so much time in D.C., the reality is for the first time in 30 years, U.S. is ahead of China when it comes to tech. And when it comes to what we've seen from big tech, I think there is a government backstop, because the reality is that it's led by Godfather of AI, Jensen Nvidia. It's led by Microsoft. It's led from what you see with OpenAI. And look, the worries about the too big to fail and some of the concerns, we are still, like we talked about, we're top of the third, maybe one out in terms of this AI game. And I think we have 2 more years left in this tech bull market. And that really continues to be the core here.
Wait, did he really say that for the first time in 30 years, the US is ahead of China? Quite an interesting statement to make, I would say. Quite an interesting statement to make. But okay. Let's see what's happening. Let's see what's happening pre-market. And yes, for those joining, always wear the blue. All right, let's see what we've got here. So Oracle is seeing a little rebound right now. Seems like maybe the fears are going away a little bit, despite CDS still quite high. We do have Oracle that will report 2.5 weeks from now. That's going to be one heck of a report. We're back here above $200 pre-market. Tesla is up 1.2, Amazon 0.9. Amazon back here at just at the pre-earnings levels. Netflix 105. Apple making all-time highs. Yep, that happened. Meta is down 0.4 and Google is down 1.1 right now. Then as for the fintechs, we have Robinhood. Robinhood is really pushing into the prediction markets. I think they made an acquisition, so they really want to rely less on Kalshi, I guess, and really become their own Kalshi and Poly market, which when you do $9 billion or so in volume already, it makes sense. So Robinhood, I do think that yes, in the low hundreds was a good opportunity if you wanted to load up. It's already a $100 billion company, I know, but the execution is quite crazy there. The execution is quite crazy and quite good. Then what do we have? Bull. Wow, Bull is up 8% today. I don't know if there was a news that came out or something, but Bull is up 8%, back above $9.40. A green screen. Yeah, what did you really think? Did you really think that this was my apartment, like a Bruce Wayne type of apartment with this type of view? I mean, I'm doing well with the portfolio, but I'm not doing that well. I'm not doing that well. Dave is up 2.2, SoFi 1.4, Sezzle is up 8%, Pagaya is up 8%, now back above the 200-day moving average. PayPal, yesterday was green, today 0.5%. We'll see what happens throughout the day, the usual rug pull. Chime is battling here with the 50-day moving average, closing in on $20. Block is basically flat, and so is the local. Someone asked me, wait, what was this? Someone asked me what my thoughts are on the local. Still the same, still very bullish on the company. Why is the stock not moving? You got to ask the market. I don't know why. The numbers keep going up. Yes, gross profit margin, gross profit was a bit a miss last quarter, but TPV keeps going up quite drastically. So that's good. Then we have Cypher that's up 7.4% this morning. We have Nebius up 3.6%, CoreWeave up 3%, Iron also up 3%, Hut 8 up 1.6%, and White Fiber 0.8%. So it seems like we are getting a little rebound right now on the Nvidia side of things. Yesterday we've got the Google or Broadcom versus Nvidia. Google Broadcom side went up, Nvidia side went down, right? Because we're seeing here ASML, although ASML is winning anyways, up 3%, AMD 2.5%, Nvidia almost 2%, Micron 1.6%, Lam Research 1.6% as well, CLAC 1.2%, TSM up 8%, so is Intel, so is Applied Material, Qualcomm is up 0.4%, and then yeah, you have the camp of yesterday that was green. Today it's down a little bit, And so all in all, this is basically it. We do have all-time highs for new. So congrats to all the new shareholders. Almost at $17 for new holdings. If I were to invest between the local and new, it's different, right? Different types of companies. So my question to you would be, what would you like better, right? Do you like a type of neobank better than a payment processing in emerging markets? It's up to you. Of course, new is much bigger than the local. I like both, but I own the local. Should you buy PayPal? I mean, that's a question you have to answer yourself. If you think you're going to make a quick buck, then PayPal is definitely not the one you should get right now. Thank you for the comment. Can I share a bit about my ad revenue, affiliate revenue, etc.? Do you want my personal finances to be public? I don't think that's a good idea, no? Percentage-wise, I can tell you that Google makes up now more than the affiliate. That wasn't always the case. I would say 60-40 maybe, 60-40 or so. Exactly. If you think you're going to make $1, it's not the one. Exactly. But if you think you're going to make a lot of bucks, then it is the one. But it's going to take some time. All right. Let's see what we have. Who's red today? All right, today, at least right now. So Google is down a little bit, so it's fine. Salesforce is down 0.7. Reddit is down 0.6. Yesterday was a good day. Yesterday was up 12%. I wonder why. Meta is down 0.3. That's fine. Shift 4.1, and then Adobe is basically flat. Right now. Adobe is definitely the new PayPal. This is it's a good company, very profitable, buys back a lot of shares, high margin business, misunderstood by the market, I would say. Have I covered why Google just fell? There's nothing to cover, right? Google is down 0.7% after being up a lot more over the last couple of days. There's literally no reason to look at explanations. This is just the usual thing of what happens with a lot of stocks. What do I plan to do with Google? I don't plan on adding right now. Do I plan on taking profits? The only reason I would take profits if I have something else to do with the money, and I don't have. Although you might say that it makes sense to take some profits right now, especially since the bears have become bullish. That might be a sign of the top, but I don't need to take profits at the moment, and it's not like it's super overvalued or something. It's overbought. It's a bit stretched right now, but I don't see a reason why I should, unless really it was my number one position and it's suddenly 60% of my portfolio, etc., then yes. But no, it's still a big position, but I don't see a reason. Right now. Have I added to Iron? No, I have added to Nebius and CoreWeave. I've not added to Iron in the recent weeks. Why? Again, because my conviction around those two names are higher than Iron, and if Iron works out, which I think it will, I'll already make a decent amount. I know I sold half at a higher price, but it's I still own 500 shares, and I think that's enough for me with the exposure that I have. Enough. Do I still own Micron? Yes, I do. Yes, I do. Micron, they will report. We still have time. Also, mid-December. Mid-December, probably we're going to hear the same thing as 3 months ago. Lots of demand. We are ramping up fast. The reason it fell here is because they said they're going to invest to build more. Okay, market still doesn't like it for some reason, but it doesn't like the investments. But Micron has been performing extremely well, especially this year. Exactly. I mean, every live stream I had to talk about Google. I had to talk about Google every live stream. Could not have gone past a live stream without talking about it, and I'm happy I did. Happy I did, because it was one of those no-brainers. It was one of those no-brainers. PayPal is actively doing a share buyback program. Yes, but I would like them to be more aggressive. Way more aggressive. I mean, I'd like them to just use the 5 billion right now, this quarter, and then not do anything like next quarter or something like that. An accelerated buyback at these prices is a no-brainer for me, but apparently I'm not loud enough. But I'll continue to push. What do I think of Visa and Amex? Visa, Amex, MasterCard. Actually, maybe we could add them to the Fintech, although I wouldn't call it Fintech per se. But wait, it's not Amex, it's AXP. Okay, Visa, and then MasterCard. Let's see what they've been doing. 3 very good, solid compounding companies, right? American Express have been doing very, very well. Visa, more recently, has been staying flat. Flat. It has gone up and down, but since January, it's basically flat right now. And the same for MasterCard. The exact same chart, almost the exact same chart. American Express has been outperforming for now. Again, these are great profitable businesses with insane margins. If we go and look at Visa, let's quickly pull up Visa right now. Uno momento, por favor. Let's do this. Voila. If you're interested, Fiscal AI is running a 30% promotion until Monday for Black Friday. It's the platform you're seeing right here. If you want to try it out, use the link in the description. 2 weeks Fiscal Pro for free. Then you can get 30% off all plans. Around 20 of you have already done so since yesterday. So thank you very much for the support, and hopefully you do enjoy it. And if you don't want, that's fine as well. You'll see it in every video anyways. So Visa, insane margins, right? I mean, free cash flow margin 53, close to 54%, net 51, EBITDA 70, and of course, gross 97.8. It's a solid compounding company. It's not that expensive either. 26 times forward PE, 32 times trailing. Let's see what MasterCard is trading at right now. A bit more than that. Margins here also 54% free cash flow, 45.3% net. They do expect to grow a little bit faster, top and bottom line, which is maybe why they're getting a small premium. But okay. But yeah, all in all, those two are great. And then if we go and look at American Express, here margins are a bit lower. Revenue a bit slower. Same as Visa, I would say. Same as Visa. Trailing P 24.4, forward 21.8. So they 3 great companies, I would say. 3 great companies, very profitable. Very profitable companies. I don't think they're going away anytime soon. As some people say, oh, stable coins are going to make them disappear. I don't think so. I don't think so. SoFi, S&P 500, one in December. I don't know. It's they are a candidate for sure, but I maybe it's a bit too early. Maybe it's a bit too early. I know that who just entered SanDisk, I think just entered. I think it's a bit too early. Would be great, but again, it's actually fiscal AI. It's not like it's never going to happen. It will happen eventually. Do I need it to happen right now? No. No, I don't need an exit plan for SoFi. SoFi is worth $35 billion or so. I think it can be worth way more in the future. Way more in the future, with or without the S&P 500 inclusion. Will I buy Hood? If I didn't have that many fiscal, if I didn't have that many fintech players in my portfolio, I would probably buy it. It's one of my big regrets of selling Hood too early. I mean, I bought it. I think me and Arnie and Alejandro talked about it at $10 or so, $8 billion in market cap, I think, and doubled very quickly. And then I sold. I should have never sold it, but it is what it is. I could have re-entered. Hood, of course, earlier this year, but yeah, I bought other stuff. I bought Nebius, so that was great. But yeah, here the April $30 or so were the lows. Was an incredible opportunity because you might not like Robinhood because of what they do and the fact that it is a stock casino platform. Let's be honest, but it is very successful. It is very successful. They're growing like crazy. People like the experience on it. They are going to make quite a lot of money. They are making quite a lot of money even today. I do think they will grow into something much bigger, also outside of the United States. So yeah, I don't think this is the end game. I think it's far and away from the end game. Visa, MasterCard way better than PayPal. I don't think it's a better opportunity than PayPal at these prices, if I'm being honest. I don't think there are many companies that have better risk rewards than PayPal at these prices. You might disagree, but I've looked at the company for a long period of time, and I can tell you that it is extremely undervalued, and Visa and MasterCard are not extremely undervalued right now. Will they beat the market? It's definitely a possibility. I do think so. But I think PayPal will crush the market in the future. I don't know. I don't know if SoFi will enter. I don't know. And honestly, I don't care. I don't care. If we don't get in December, then maybe we'll get in the next time or the time after that or the time after that. I don't care, right? It took Robinhood a while also to get in. Does it change? I don't think it changed much. I don't think it does. La la la. Plus, I mean, for Robinhood, I'll tell you, I mean, if I get access to Robinhood in Europe, like the not the tokenized asset type of thing, but the real experience Robinhood that you get in the United States, and I do get the 1% match or 2% match or whatever promotion they're running, I'm going to transfer everything, right? I'm going to transfer everything to Robinhood. I guess that's a bullish thing to say. Now, it might just be me because I look at these companies on a daily basis or a weekly basis, so I know about it. Maybe the majority of people in Europe or outside the United States are not familiar with that. Okay, that's fine. I mean, Revolut is now worth, according to the private markets, $75 billion or 75 billion euros. I think $75 billion or so. So, yeah, I mean, I think Robinhood will continue to do very well. What are the main growth levers for PayPal? I'm still confused where they're going to use the ads platform. We are already seeing ads today. I mean, no, but I'll show you. The growth levers are. No, I've forgotten. I think it's this account. Yeah, the growth levers are simple. Buy now, pay later, growing very fast. Venmo growing very fast. We see Braintree, right? PSP growing, reacceleration in growth, and it's growing in a profitable way. This is basically what you're seeing: sponsored ads inside of PayPal and Venmo apps. Dick's Sporting Goods. You click here, shop now, you're done. Apparently, if you do a Google search for trends, you do Affirm buy now pay later, PayPal buy now pay later, Klarna buy now pay later, you can see that PayPal buy now pay later is gaining a lot of momentum. And this is just one of the products that they offer. The others, that's the only thing that they have, right? That they are buy now pay later businesses. Of course, they're much bigger than PayPal right now, but still, it's a good thing to have. There are more ads. Wait, this is an account, great account, by the way. It does post every time he sees an ad on in PayPal or Venmo. So here we have Comcast. This is an ad. Verbo. This is an ad as well, directly integrated. Again, when you have the two-sided network that PayPal has, it becomes very easy. It becomes very easy to match people. You make a purchase through PayPal or through Venmo, you get smart receipts, you get rewards, cash back directly into the app. You can be targeted in a good way, right? If you are shopping for something, now also with the integrations with Perplexity, with the others, right? Gemini, ChatGPT, agentic agents. You shop, you make the payment seamless, safe. It will take time for the adoption, right? So the huge adoption, but they're doing, at least they're doing something good. They're not waiting 5 years to actually follow an Apple Pay or a Google Pay. No, they're trying to be the front runners in this agentic world, stable coins, and all of that. Do I use Revolut? Yes, I do use Revolut. Just P2P payments, and started using it also to buy some shares. Not a lot, but just to see what goes on with the app. I use it as well when I need an eSIM. When I travel, it's very easy through the app. It's a very good app. Although yes, the investment user experience could be better, right? It's not very clear when you look at your position, like what's your average price that you bought it at, or a lot of small things that don't make much sense. But it's a good app to have, definitely. In Sweden, only criminals use Revolut. I don't know who runs around in Sweden, but what did I want to say? Do I think Revolut will ever go public? I think so. I don't know when, but I think the goal is to go public eventually. No, it will be one heck of an IPO if today they're already worth 75 billion. I think we're going to have a lot of huge IPOs. Like, it's been a quiet period. It's been a quiet period for a while for like big IPOs. Yes, we have CoreWeave, we had Klarna, Circle, Figma, but I mean, a Revolut going public, that's going to be a big one. OpenAI eventually, that's going to be a huge one. That's going to be so interesting to see what the heck's going on inside that company. Anduril also probably going public next, I would say, 2 years or so, maybe Starlink. Stripe is one of those companies where I think maybe they're not going to go public ever. Maybe. Yeah, no average price visible is like, I don't get it. I don't understand why. It makes 0 sense to me. 0 sense. No level 1 options, but that's normal. Like a lot of platform, like eToro doesn't offer options either. A lot of platforms do not offer options for, I guess, various reasons. But yeah, Revolut is a very big platform, very big neobank, I would say, and they can grow like a Robinhood if they want, but the fact is that they're not big in one country, they're big in multiple countries in one big continent, but they are going to expand, and they are expanding quite rapidly. I have not tried 212. That's in the UK, right? I've not tried it. Neg partners with PayPal. Okay. What, for probably for the holiday season or something? If criminals use Revolut, that's bullish. They got a lot of money. Yeah, but usually that money stays in cash, right? Not digital. Unless they get cash in hand and they transfer. So like washing the money. It's a quiet day. It's a quiet day in the markets. I do still wonder why bull like Webull is up right now. If someone can tell me, that would be great. I still haven't found anything. Maybe it's just like a post-earnings reaction. Let's see if I can find something on Webull why it's up, but I don't think I've seen anything right now. Nothing, nada. Yeah, Oracle is up because we do have a comment from Deutsche Bank. No, this is not the reason. Where is the Deutsche Bank thing? So Deutsche Bank is saying that the sell-off brings attractive entry points. According to them, they have a buy rating on the company, the stock, and a $375 price target. Where is my big tech here? So this is why we're seeing Oracle up right now. It's because of the Deutsche Bank. Which platform do I use to invest? I use a bank, I use eToro, and now I use Revolut a little bit. Why don't I use interactive brokers? Because I did partner up with them a while ago. The experience was not great. So I don't need another platform for now. Is it just sympathy with Hood? What does that mean? What does that mean, Simon? Quiet days so far. Yeah, I mean, the fall here of this is from the peak to the bottom, 46% drawdown. We're now at, let's call it 40. Let's call it 40. But yeah, it was oversold. This was because, of course, the huge RPO, right? The $500 billion in RPO. We'll see what they'll report in 2.5 weeks or so. They'll have to report great numbers, right? Otherwise, it didn't make any sense. And then they will be asked about definitely capital raises, how are they going to finance all of it, etc., etc. As in the same sector, one goes up, so the other goes up. No, there is, I mean, Hood goes up because they announced that that acquisition of the prediction markets of a company, I think, that has a license. And the rest goes up because of them? No, I don't think so. I don't think so. Like Webull, I don't know. I mean, Webull has been crushed. So I don't know. I haven't seen anything. It's still up 7.4%. Estevao makes wonders. Indeed. Lamine Yamal is still trying to figure out how to get out of Kukureya's pocket. Is Revolut considered a PayPal competitor? Yeah, I would say like a Venmo competitor, a Robinhood competitor, a SoFi competitor, maybe. But when you think about this, the competition is going to be the legacy banks. I'm sorry to say, but it's going to be the banks that still don't innovate, still offer old services, um, high fees, and all of that. That's the competition, I would say. That's the one that will get crushed, because the money, right, is coming from, it's not coming from a SoFi or a Revolut or a Robinhood. No, the money is coming from people that have money in older bank accounts, and they want to move that money towards a platform that is more flexible, maybe more transparent, easier to use, faster, cheaper. That's the competition. And that's why I think you're going to have many new winners. That's why I think Robinhood can still be huge in the future. But I think Robinhood and SoFi can grow into something big in the future. New, also, same thing here. Mercado Libre with Mercado Pago will become and is already quite big. People always try to like, oh, it's Robinhood versus SoFi. No, it's not. It's not. It's Robinhood, SoFi, and a lot of other smaller neo banks, players, whatever you want to call them, versus the Chase, JP Morgan, Charles Schwab, etc., etc. They want to take the money out of those old companies and make that money come on their platform. I know it's always fun to laugh. Oh, it's SoFi against Robinhood. Haha, Robinhood went down. No, that's not. Yes, there are competitors, but it's a huge market. It's a huge market. Am I a Chelsea fan? What made you add that? Is it this? Is it this? Yes, I am. Of course, I am. I was checking PayPal's App Store rank across country, and they consistently in the top 5. Yes, and Venmo as well. Well, Venmo is available in the United States, but Venmo is also extremely highly ranked. Thanks, Amit. Let's see. No, Google, I'm not looking to sell anytime soon. Venmo is pounding the airways during college football games here in the United States, going after the college kids. Yeah, I mean, they have the partnership. They have their partnership with what is it? How is it called? 12? No, Big 10, Big 10 or Big 12? Big 12. Yeah, so it makes sense, right? This was announced back in July. Venmo launches Big 12 debit cards for students and fans to score more across campus and on game day. Plus, you get like a cool looking debit card. Venmo is growing like crazy. Buy now pay later is growing very fast. I'm telling you. I mean, I thought 25 would be the year the market would pay attention to PayPal, but I think we're going to see a lot more movements in 2026, hopefully. I know wishful thinking is not investing. I know. I'm not wishful thinking. I'm just saying that the market is wrong, and I believe I'm right. It's just taking more time to prove the fact that I'm right. Okay, it will take the time that it will. I don't know. Don't forget to drink water. Don't forget to drink water. Thoughts on Rubric? And Russell, thank you. Thank you. Thoughts on Rubric? I mean, I still like it. I still like it. They will report in, let's see if we got a confirmation. Yes. Thursday. So next week, Thursday, they shall report their quarterly figures. I think it's going to be a good one. What will the stock do? I don't know, but I think it's going to be a good one. Will SoFi Revolut kill Venmo? No, no chance. Someone trading on 212 recommended me. How can you recommend the YouTuber on a trading platform? Anyways, welcome and thank you. Welcome and thank you. Ooh, Oscar is up 4%. So this is an interesting one, right? Because we've got that huge jump here because of that report that said that the enhanced subsidies are going to be extended by 2 years. There might be some changes to that whole program. And then I saw yesterday, after hours, the stock did drop a little bit because apparently the 2-year extension is not going to happen. But now it's up almost 4%. So is it going to happen again? Or what's going on there? I don't know. But anyways, next year, end of next year, there's midterms in the United States. I highly, maybe it's just the Piper Sandler. Yeah, maybe it's the $25 Piper Sandler upgrade that pushes the stock back up. Okay. Yeah, with the midterms, I don't think Republicans are going to try and hurt their base. So, but we'll see. We'll see. I do think that there are some changes that are going to happen to ACA. But yeah. 212 has a chat and forum. Okay, interesting. Interesting. You're not sure Venmo has a future? Why not? I mean, it's growing and it's now getting monetized, and it's very, very, very popular in the United States. What do I think about Real Madrid's current season? I mean, they're still first, no? I think they're still the top of the league, not by much. I know the results recently were not great, but people are just freaking out because of nothing. I don't get this sentiment around Xabi Alonso. I think he's a good coach. I think just some Real Madrid players are spoiled brats that, yes, need a little reality check. And if they think they're bigger than the club, sell them. Like, what do they think? They think Real Madrid, as a Chelsea fan, Real Madrid is still like probably the number one destination for 90+% of football players. So they should use that and say, you either listen to what we have to say, like the coach, or we kick you out, and it's only downhill from here from you. And yes, I am talking about Vinicius and whoever thinks he's bigger than a football club. And I think it should be like this for every football team, every NBA team, every sports franchise. No player should be bigger than the team. No player should have a bigger mouth than the manager. You're a player. You're getting paid millions to kick a ball or throw a ball or whatever. Like, shut up, play for 90 minutes every week, train every day, be quiet. That's it. That's it. It's like the most luxurious life, and they still complain. Like, you want to complain? Go work at McDonald's. We'll see how long you can last. I'll take your spot. But yeah. Venmo might be a BlackBerry? Nah, I think you are mistaken. I think you are mistaken. If you have Messi would not have Messi does train, does perform, and yeah, sometimes he did complain, but he complained because he wants to win. He doesn't complain because of some stupid things. Plus, they don't have a Messi, so let's be honest. I don't think Venmo is going away. I think it's going to become bigger and bigger. It's far from a BlackBerry, I would say. It's just they didn't pay that much attention over the last couple of years, which is also why it has not been monetized. But I think that's changing very, very fast right now, which is a good thing, which is also why it's growing fast. Anyways, we are going to open the market in... You just got a Venmo ad? Very good. Very good. Maybe if I say, hey, Google, things are suddenly going to pop up in everybody's household. So, thinking, yep. All right, ladies and gentlemen, the market is open. Ding, 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 bing, bing, bong, bing, bong. Markets are open. It is November, Wednesday, 26, the last normal day of the week, because tomorrow the markets are closed in the United States, Thanksgiving. So hopefully we'll be very thankful. And Friday, it's only half a day. So enjoy the last normal day of the week. As you know, the heat map is going to take a couple of seconds to update, um, and we'll see. We'll see if we can continue our rebound or if we're going to struggle to continue our way up. I'll close the poll right now. It seems like 64% think that we are going to be green, 18% red, and 18% flat. Okay. So far, you guys have been fairly right, I would say. Fairly spot on, even. Okay, though. Let's see what we have here. So, numero uno, we have here CoreWeave at 5.3%, now 5. Robinhood, same thing, 5%. Oscar, 5.8 now. So back above $17. BMNR at 30, up 4%. Nebius at 3.2. I still think I have to buy more Nebius. I'll maybe do a specific video today or tomorrow, because despite Nebius being up so much over the last couple of months, it's still what, a company worth $22-25 billion or so. It's $100 billion company in the making, and I think people are still underestimating what they are trying to do. But I'll explain it. I'll explain it in another video. New all-time highs, 5.2%, $17.32. Iron up 2, Micron up 2.5, Novo Nordisk up 3, AMD up 1.5, Nvidia again over 182, 2.3%. So we have greens across the board. Okay, big tech. Oracle up 5.2, Netflix 1.4, Tesla 1.7, Apple 0.5, Amazon 0.2, Meta 0.1, and Google down 0.1, not by much. As for the semiconductors, ASML up 3.6, Micron 2.8, Nvidia 2.3, TSM 2.2, AMD 1.8, 1.6 for Intel, and then Lam Research, Clack, and Applied Material between 0.7 and 1%. Qualcomm flat, I would say Broadcom flat here as well. CoreWeave up 5.6, Nebius 4.5, White Fiber 2.7, Cypher 2.4, Iron 2.4, and Hut 8.6. Fintechs, Bull is up 6.3, so a bit less than pre-market, but okay. Robinhood 6.2 as well, Dave 2.2, SoFi 1.9, Pagaya 1.4, Sezzle 0.4, and then we have PayPal still green, 0.3, let's say. Block 0.5, Chime 0.4, and then we have your American Express at 0.3, D-Local, MasterCard, and Visa are basically flat. So yeah, I'm from Belgium, Eric, or Enric. I thought this was Eric, but maybe no, Enric. For me, Uber, I did buy Uber last week. Yes, I did buy Uber last week. I think it's cheap. I mean, it's either you believe that they're going to survive this whole autonomous thing, or you don't think they will, even though the platform is much more than just mobility, right? Delivery is pretty big for them. But yeah, I did buy last week a little bit more. Free cash flow wise, I think it's still a very, very good company. And again, I understand the risk. I know the risks. And as long as Waymo and Tesla do not take 90+% of the market, they'll be fine. They've just announced that they're launching commercially available operations with Rewrite in, I think, Dubai. So again, I think there are just so many. I think AVs will become a commodity in the future. so many players, and Uber does have the distribution platform. They sit in the middle. They have quite a lot of investments in those companies as well. So I think they'll be fine. I think they'll be fine. Yeah, apparently people thought I am from Portugal or something like that, but no. Whoa, okay. Oscar, 9.2%, back here at $18.30. Not too bad. Yeah, Van Antwerpen. Van Antwerpen. Okay. Interesting. Now, yeah, okay, now I look like an idiot for not buying here at 13, but I had my reasons, right? I could have bought even after, right? I could have bought here at 18 and then go back down to 13. Feel like an idiot. Yesterday, maybe I could have bought a little bit, but yesterday didn't really pay attention after the stream what's going to happen with the market. But anyways, we have a position. We are now making money. That's the important part. Am I going to add more? Probably. Maybe not today, but probably. Exactly. The rest is parking. Waymo is partnering with Uber, yes, but not every city that they launch, they're partnering up with Uber. There are certain areas where they're partnering up with Uber. I think there is one maybe area where they're partnering up with Lyft, and then they're launching on their own as well. But Uber is a worldwide company. So Uber has partnerships worldwide with other companies out there. They have Uber Eats. They have a big advertising business, which is also growing quite rapidly. They have 30? How many members does Uber One have? Uber One members. Let's see. I think the last time I checked was 30? How many Uber One members? Yeah, more than 30. More than 30 million subscribers on Uber. So imagine it's a bit like the Amazon thesis, right? You have Amazon Prime, which I don't know how big of a percent of the overall population of the United States has an Amazon Prime membership, but Uber could essentially then offer, right? Okay, you are a member, you'll get a discount if you use Uber for AV rides or whatnot. If you order above $50 on Uber Eats, you get a coupon to get a ride for free or whatnot. And then, yes, eventually I do think that advertisers are going to subsidize a lot of AV rides for events, for things like that. So the cost of an AV will come down. But all of that, I mean, we're going to only see really how profitable these things can be probably 2-3 years from now. Did I check out Kraken? Yes, I did. I think 11 months ago or something like that. 11 months ago when I found out that there is a link with Anduril, but I do think that link has been overblown. People think that they're a huge supplier to Anduril. They're not. If they were, they would have been generating a lot more revenue than what they are doing right now. But yeah, interesting company, have been performing very well this year. Don't see why Google should give away profits to Uber and Tesla either. Well, it's not to Tesla, but to Uber. It's purely because of the scale of distribution. I mean, the distribution that Uber offers is insane. Then, again, Waymo is still small, all things considered. You need to take care of the fleet. Waymo does not always want to take care of the fleet, right? You will have fleet operators, you will have people that need to take care of that car, charge it, clean it. If there is an issue, you have to take care of all of it. Plus, again, if you're launching something, it's much better to launch it with a huge distribution partner than to launch it alone, because then, I mean, your return on investment is not going to be great. With Uber, you get exposed to millions and millions of drivers, riders every single day. If you compare how many app downloads Uber has and how many app downloads Waymo has, it's there's no comparison. There's no comparison. So yeah, it's just a good it's a good deal. It's a good deal. It's like give and take. Give and take. Obamacare extended. I haven't seen anything like confirmed, unless it is confirmed now. But I don't think, because again, yesterday night I saw like the contradicting. I am seeing this right now. Trump says extending ACA insurance subsidies might be necessary. This was tweeted out now. Okay. I mean, again, you can extend, which would give, you extend it and then you give yourself time to find ways to make sure that the program becomes better. The spending does not go to waste, but you need to extend it. You need to extend it in order to not shock, I'd say, the whole market. In this case, the ACA marketplace. I see Google dropping Uber in a few years, just using them now. I don't. Again, the risks are there for sure. I agree with you. If Google and Tesla take the whole market, you don't need an Uber. But if there are many players out there, you would be a fool not to use Uber. Because let's say you are a owner of a fleet. Would you launch your own app, or would you list your fleet on Uber and have super high utilization rate? You'd probably list it on Uber, even if Uber takes a percent, right? It's like the dlocal thing, right? Okay, we are going to increase TPV by quite a lot, but take rate will come down a little bit. Doesn't matter, because TPV is increasing much, much faster than the take rate dropping. The same thing could be said here. Doesn't matter if you're making a percent less or not. The fact that 1 million extra people might use your service, that's how you're going to make more money. Plus, you have the whole Uber ecosystem is quite big. Uber customer service sucks. I mean, I can make the case that every customer service sucks, right? Because everybody has had a bad experience with some customer service. Doesn't mean that the whole company is crap. Plus, let's be honest, people go online to complain. They don't really go online to say that, oh, I had an amazing experience with this company's customer service. It's like every time we hear about, oh, an Airbnb horror story. Yeah, okay. Who's going to spend time to go online and say, oh, we just had a wonderful weekend with Airbnb and the host was... No, it's like you're going to have way more negative comments than positive comments. It's just the way it is. You know how many horror stories you have about people in hotel rooms and hotels? A lot, but it doesn't go mainstream. So yeah. Okay. What people don't understand is that Waymo is not going to be able to extend to other markets internationally nearly as fast as Uber. Autonomous driving takes a lot of training and time. I disagree. Why? Like, how did you reach that conclusion? I'm pretty sure that Waymo is going to expand to Tokyo, Japan. I think not that long from now. Autonomous driving takes a lot of training and time. Yeah, but they're already doing a lot of driving and training. Remember, Waymo is backed by Google. I think they have the compute power and the money. And shouldn't really take... I mean, driving is still driving. Yes, you have to learn the rules of the road, but eventually driving is still driving. If a human can adapt, a super smart computer can adapt as well. But yeah, you will launch probably with a partner to manage the fleet, the payments, the distribution, the maps, etc., etc., etc. Okay, let's see. Before we end, what do we have? Big movers. Okay, wow. Hood is now up almost 20% or so since Friday. Very nice. PayPal is still green, thankfully. Pagaya is up 2%. Okay, I'm happy with that. 2% for SoFi, happy with that. You know who we didn't look at? Figma, sorry. Figma is finally seeing, not finally, but another green day. $35. $35. Let's see a firm back at 70. Okay, back at 70. Klarna is also up a little bit, back in the $31. NeoClouds, we are seeing here $75 for CoreWeave. So it seems like CoreWeave, Oracle, they're getting a little bit more love. I do think that CoreWeave might move a lot after Oracle's earnings report, if it's good, of course. Nebius up 6%, Cypher 6.5%, Iron is up 2.3%. So back here at the previous bottom, let's see if we can hold that $50 line. Chip makers are all green. So we're seeing a little rebound from yesterday. Big tech, only Meta and Google are down slightly. So again, the winners of yesterday, let's say. Oracle is up 4%. But it did bounce back down. The 200-day moving average is at 210. We're back here at 205. I am a subtle comedian. I've been called the clown for so long that I might as well make some jokes. But yeah. Zscaler. Let's see what they are down 9%. Again, the report was good. I think the question is more about profitability of the business. Like, when are you going to consistently be profitable? But the results were fine. There is maybe like a slight gap here. But other than that, still, let's see if it can hold or recover back above that 200-day on the daily. It's quite close to being oversold, right? Because it's already in a drawdown of around 22%. We can actually see the frequency. So every 18.5 months on average, it has a 15 to 20% drawdown. Zscaler. Now that we talk about Zscaler, what's going on with CrowdStrike? Still, okay, CrowdStrike is crazy. $509. Not bad at all. 15% drawdown from the peaks, not that crazy. But yeah, a 15 to 20% drawdown on average happens every 19.4 months for them. I do wonder what Netflix. Yeah, I think Netflix is a pretty good buy. These prices, if you're looking for like a solid company to own. Amazon, we've seen, right? Amazon, every 12 months or so every year it has like between a 10 to 15% drawdown or something like that. I look like Ronaldo McDonald. I always end early. I mean, I'm already streaming an hour and 20 minutes. It is afternoon for me, so I still have like a life that I want to have. But yeah, might go to the gym after this and then work on another video. Yeah, I mean, Oscar, if you bought the bottom, and if you put $1 million here if you put $1 million in Oscar last Friday at the bottom, if you timed the bottom perfectly, you would have made $400,000. Crazy. Uber has too much going on. DoorDash is so much better than Uber Eats. The big city combo is DoorDash and Lyft Pink, not Uber. Lyft has scooters. You see, again, I read the comment and then I go and look at Uber's numbers and I'm like, okay, it doesn't match. Okay, it doesn't match. And Lyft DoorDash, they're not worldwide companies, although DoorDash is a bit more international than Lyft. Uber is a worldwide company. And yeah, you can switch to Amit when I end, of course, because I think he goes on for like 3 hours or something. Run on the treadmill and comment on stocks. Yeah, maybe. Yeah, where is Nike? Still in the 60s or? Yes, indeed, still in the 60s. Wow, so Nike, wow. So 5 to 10% drawdown happens every 4.7 months. Yeah, okay, we're currently in a 54% drawdown over the last 52 weeks. DoorDash owns, yeah, that's why I said they have more presence internationally because they bought it. But still, Uber is huge. Am I saying that Amit doesn't have a life? He does have a life. It's called YouTube. No, but I mean, he does like 2 super long lives. I don't know how he does it, but it's a great skill. I can't. It can't be 3 hours in a row talking and sitting on my ass. Although I do not have a smart desk, so I can technically stand up and speak. Great investment, I would say. Okay, so all in all, we have 3 red names on that list. The usual suspect, Salesforce. Let me actually make this like this. Voila. By the way, for those, yeah, Lyft is expanding internationally, but again, it's super, super small, And I'll repeat it again. If you have arguments, it's fine. Look, make your arguments, make the bear case. It's always good to make a bear case to a bull case, compare it. But then look if the bear case makes sense. Because if it's not reflected in the numbers, then maybe Uber is just a better company. Because DoorDash has existed before, Lyft has existed before, Deliveroo existed before. What is the other one? The orange thing. Just Eat or Take or whatever. They've all existed before, and yet Uber is where they're at because it's Uber. You say you don't see the bear thesis in Uber's numbers, so how come you don't own Adobe? What's the... Like, why is 1 + 1 3 in this case? Like, how do you get from Uber to Adobe? The reason why I don't own Adobe is because I cannot own every company that's undervalued in the market. If I did, if that was the case, then I would own Salesforce, I would own Adobe, I would probably own what other companies is very cheap at these prices. Probably a Novo, probably a Nike for a turnaround, maybe a Netflix as well. Takeaway. Yeah, takeaway. I cannot buy everything, right? It doesn't make much sense. I would have bought a Zeta as well. But if I had, let's say, an open spot in the portfolio, yeah, I think I would have gone with an Adobe. Because it is very cheap and very profitable. And I think the fears are overblown. Yes, I agree. That the numbers are cheap. And again, I did talk with some people at the company. I agree. I'm not saying anything else. But the reason why I don't own it is because I cannot own everything. To own Adobe, I would probably have to sell something else. Again, it's about switching stories. For now, I'm happy with the stories that I own. Adobe has serious moat problems that people still want to ignore. I strongly disagree. But if you can name the moat problems in the chat, we'll probably tackle that right now. Let us know. Transmedics is back at the highs, I know. Back at $145. So whoever picked up shares here at $110, $112, congratulations. That pullback never made sense. And you're going to ask me, so why don't you own this one? Same answer as before. I'm here to cover stocks. Just because I like a name or I cover the stock doesn't mean that I own it. But a lot of people do own it and they like the information that they get. I mean, it's free anyways for you, so why not? I am talking. I'm just talking about stocks. Let's see if you can, Mr. 2.0. Good name. Let us know. Let us know. Fair enough, need to have concentration. Yeah, I mean, I'm not that concentrated either, but I don't want to own like 50 names, something like that. Any news on Nvidia for China market? No, but I did see like a report that said that ByteDance was not allowed, ByteDance, the parent company of TikTok, was not allowed to buy Nvidia chips by the CCP or something like that. Ah, voila, Marvell is the name that's missing here. Voila, Marvell is up 3%. Thank you. Long term, I don't trust them not to be a Kodak. Okay, but this is not a reason. Like, you don't trust them not to be a. Explain to me why you think the Adobe Creative Cloud ecosystem, the marketing that they offer, the analytic tools that they offer, all of that. Why do you think that it's going to be destroyed? Like, do you think that there is another company out there that can create over the next couple of years one company that offers one subscription that gives you solutions, programs that can talk with each other or be integrated one with another, like Photoshop, Illustrator, InDesign, Premiere Pro, Adobe Express, PDFs, all of that from one company. All of that exported into a file that can be read by your colleagues, by another designer, by another editor, all of that working with the same AI credits that you're buying. By the way, when you're paying for the Adobe Creative Cloud Pro subscription, you are also getting, of course, access to third-party models, right? Gemini Nano Banana Pro, you get access to that. There are integrations with ChatGPT, integrations with Gemini, Black Forest, I think Runaway. So instead of you paying 5 different subscriptions to ChatGPT, Gemini, Runaway, Black Forest, whatever, you're paying one subscription to Adobe. You get Adobe Firefly models, and you're also getting third-party models integrated. And then, yes, the more you use it, the more you'll have to pay for the credits, which is a bull case for Adobe, right? Because the more people create, the more output there is, the more marketing material, the more content that goes out, and the more credits that they use. And then they recently announced, like a month ago, I still didn't release that interview, about Adobe Firefly Foundry is making custom models for specific companies to be, of course, commercially available for them. So they gave the example of Home Depot, right? The orange, the orange brand that they have, right? For Home Depot. Again, a model custom made for that specific company. I think NBC Universal was another one that started with them. Custom model for them, their IP, commercially available. Disney Imagineering, not the Disney company, Disney Imagineering, also a custom model for them, protected by their IP, commercially available. You don't have companies that can do this. You have Adobe. What is it, 90+% of the what is it? The top 200 companies or whatnot are using the Adobe ecosystem. The creator ecosystem is so big, you don't want to be that one dude that does not use it. Yes, again, there are. Canva exists, Figma exists, DaVinci Resolve exist. Some of these things are free. Adobe Express is also free. It's a very good competitor now to Canva. Figma, some people say, oh, it's a huge competitor to Adobe. Not really. Not really. They had like 2 competing products, Adobe, but that's it. That's it. Figma is, yes, the leader in UI, design and all of that. For sure. There is a reason why Adobe wanted to buy them out, right? Because that was also a missing link in the whole Creative Cloud ecosystem. But yeah, it's a misunderstood company, I would say. It's a misunderstood company, and it's not like they are declining in revenue or things like that. No, it's still expected to grow 10% or so. Revenue, 11, 12% EPS, free cash flow still in the billions. Now they just acquired SEMrush, right, to help with the marketing stuff. So in the meantime, yes, they're buying back a lot of shares. See, it's the same as have I seen Nano Banana Pro from? Of course, I've seen. I've played around with this, making stupid, funny pictures, and I follow the page on X. Open source software will more easily be competitive and have increased compatibility because of AI programming. Again, it's true, there are more solutions out there and all of it, but as a professional, you are not going to sign up to 5 different things. As a professional, you are going to be paying the Adobe subscription and have a easier life because everything is in the ecosystem. Everything is in the ecosystem. You know you're not going to have copyright issues. You know that whoever is working with you gets the file, can get to work with it. They don't have to convert it into something else, etc., etc. They're not stupid, Adobe. Let's put it that way. They're not stupid. They've been doing it for quite a long time. I remember also over a decade ago when because remember, Adobe wasn't always a subscription-based model. You remember 10 plus years ago, you could have like a cracked Adobe Photoshop on your PC, right? You either bought it once or you became Jack Sparrow and you became a pirate and you got Photoshop for free. And then that changed. Right? That changed over a decade ago. At first, market was like, let's see what happens. But it was a great move for them because that was just the way to go. And now I think the move is also going to be the move with the AI credits. It just takes a while until you see the results being reflected in the financials. But yeah, maybe I'll do a specific video about Adobe. Yes, exactly. Yeah, like the Office 360, right? Like Office 360. You would think that Office 360 would have gone out of business with Google Docs, Google Sheets, and all of that. But no, it's still a huge business. Why? Because it's very nicely bundled into the big 360 subscription. Duolingo is up. Do I see myself opening a position in Adobe in the future? It's definitely a possibility, but something will have to go out of the portfolio. Something will have to go out in the portfolio, and for now, I don't see what or who. Where is Duolingo? Here it is. Ooh, up 5%. Okay. Up 5%. Even PayPal is still green. Touch wood. Still green for PayPal. We do have a couple of red names, but that's about it. Like all the rest, fintechs are green for the ones that we follow. Neoclouds are green. Chips are, now everyone's green. And then big tech, Oracle and Netflix are green. Oracle is giving back a little bit of its gains, but that's about it. Also, I was very surprised yesterday by the fact that not that many people got the reference of how the turntables, they thought I didn't know it was how the tables have turned, but it was the Office reference. Some did understand this. So I am proud of most of you. I'm proud of most of you. All right. All in all, this is the market. A lot of gray. A lot of gray actually right now on the heat map. Bull we've seen. I do wonder what Lululemon is doing. So okay, we'll check that real quick, and then we're done for the day. Okay, Lululemon is also experiencing a little pullback, but still down heavily. Not pullback, recovery. $182, up 2.7%. What is Intuitive Surgical doing? Probably also, after the last earnings report. That was a pretty good one. Pretty good. Axon, this one. Okay, Axon's still here around. Okay, you see, Axon is also one of those companies. It's never cheap, but it is getting cheaper now. But again, do I need it? Probably not. Probably not. The trade desk. The trade desk is still here. I think I'll just make a separate video, like specific video about the trade desk, because it is at an attractive level. At an attractive level. Yeah, low volume because it is a short week. I mean, we've known this. But we did have we are recovering a little bit from last week's from last week's disaster week. Let's put it that way. So, all in all, that's about it. Do enjoy the last normal day of this week. Again, tomorrow markets are closed. I don't think I'll do a live stream tomorrow. Maybe I will, maybe I won't. Like maybe it was very, very short, but let's see. We'll see tomorrow. But on Friday, we will be back. Also, Friday, half a day. So it will be the morning, and then you'll have like another 2 hours or so of the market. And then that's done. So, all in all, thank you all for joining. If I'm not back tomorrow, happy Thanksgiving, happy Black Friday hunting on Friday. Although I still don't get why people go in stores. Maybe because the sales in stores are better than online. But do I really want to fight for a PC or an Xbox or a PlayStation or a TV? Probably not. Don't forget to pay with PayPal or Venmo. Thank you very much for all of us PayPal shareholders. And we'll see each other in the